Hello, hello, hello. Welcome to the Bill and Row with Real Estate Show. It is Friday. I am super excited, super pumped to be here with you, Josh. We come to everybody here on Facebook Live every day at noon. Fridays is our news wrap-up show. So Monday through Thursday, we kind of do a little bit of content. So we spend about 3 to 5 minutes smoking and joking and carrying on and laughing and guffawing and talking about any pressing news stories that are interesting. Then we get into content. This past 2 weeks, we talked about Subject 2 and Rent to Own. And then what we do on Thursday is we have a guest on. So we had a really cool guest yesterday, Bruce Barlar, the wizard of mortgage lending and also a real estate investor. So it was cool talking with him. And then on Friday, we do news wrap up. Cool thing. So yesterday morning, getting ready for the show, doing show prep and everything like that. And my 13-year-old son, Uriah, says to me, Dad, who's your guest going to be today on the show? And I said, Uriah, how do you know I've got a guest on today? He's like, Dad, it's Thursday. You always have a guest on your show on Thursday. So I mean, it's so cool. And then also I went to the dentist. I know I told you this and I posted it on Facebook, but I went to the dentist on Wednesday night. Yeah. And the dentist said to me, he said, hey, you're Judah, you're that real estate guy. And I thought he knew that from like previous conversations, making chit chat with clients and patients and stuff. And I was like, yeah, thanks for remembering. And he's like, well, yeah, I mean, I see your Facebook show. So I just think it's kind of cool how many people are watching and listening and paying attention to what we have going on here. And we really appreciate our listeners. So today is the Friday news wrap-up show. But before we do that, I just want to give a quick introduction on who I am. My name is Judah Hoover, 20-year real estate investor and realtor and property manager here in central Pennsylvania. I was talking to somebody yesterday, Josh, and she was telling a client that, hey, basically, I know all the realtors who are worth knowing. She's a fellow realtor. I know all the realtors who are worth knowing in Lancaster County. And I said, and I know you also know me, but like, would you consider me a realtor worth knowing? And she sarcastically said, yeah, almost. You're almost a realtor worth knowing. So listen, I wanna help you buy and sell real estate, whether it be for an investment property or a primary residence or a buy, fix, and sell or something you want to rent out. Give me a shout. Let's talk. 717-766-7994. Josh, while I reverse my earbuds because apparently they're in the wrong ears, you tell us who you are.
Well, so I'm going to say this when you get your earbuds in. You hear me?
Yeah.
Right,
I got you.
You know what the funny thing? You know what the funny thing is about agents? When they tell you who are the only real estate agents that are worth knowing, it's just them.
Right, exactly.
So my name's Josh Weidman. I am a hard money lender, hard money bankers. We have 4 offices in the Northeast, Central Pennsylvania, Philadelphia, North Jersey, and Maryland. This allows us to, as a direct lender, a direct private lender, allows us to work locally and fund deals all in our backyard and move really darn quickly. So I've been investing in real estate since 2006. And after 14 years, one thing that people should know, whether you're looking to flip houses or you're looking to buy rental properties, unless you have a boatload of cash, and even if you do, it's great to have a good lender on your team, right? We fund deals all day, every day, right here in our backyard, Central PA, everywhere in Pennsylvania, New Jersey, Delaware, Maryland, Northern Virginia, and DC. We work very quickly. We can underwrite a deal the same day you contact us, get you approved, and if everything's ready to go, if you have all your ducks in a row, we can close the very next day. So that's Hard Money Bankers. You can reach us online at hardmoneybankers.com, or you can call me directly at 717-213-8488. Man, this is always my favorite day of the week because there's so
it's Friday, the weekend is coming, and we don't have to. I'm jumping out of airplanes on Saturday and Sunday this weekend. Very much looking forward to that. Going to be lots of fun.
On a side note, I'll be coming to you alone on Monday, but I'm just kidding. All right.
That's great.
I'm praying for you.
Right.
But I mean, yeah. So, sorry, keep going.
No, I was just saying. I was making the joke. You were leading into the fact that you love the news roundup. I was sarcastically saying that the reason you like Fridays is because it's the end of the week, and I did not mean to get us on a rabbit trail.
No. You know what though? I don't mind. Like every day is the same for me. I do the same thing every day, but Sunday. You know, it's like
Right.
I really enjoy what I do. I'm constantly looking in the market, constantly reading the news, seeing how things are affected. And this week, there's a lot of news that it is going to have a big impact on people's lives. I'm going to start by talking to you.
Yeah. So this Twitter hack to me kind of put everything else in perspective for what's going on.
Yeah.
People are dopes. Okay. So a bunch of really smart Bitcoin investors hacked President Obama's Twitter, hacked Oprah Winfrey's Twitter, hacked Elon Musk's Twitter, and a bunch of other celebrities, a bunch of other blue check, people, the creme de la creme, and they hacked them and they posted, "Hey, it's my turn to give back. I am going to double anything and send back double whatever you send to me. Any Bitcoin sent to this Bitcoin address, I don't know, it's like the Bitcoin equivalent of a routing number. I don't fully understand it. So any Bitcoin that is sent to this address, we're going to double the same day, and I'm going to double the same day and send back." And because people are like, "Oh, Elon Musk is like super rich. That sounds like maybe something he would do. I'm going to send him some Bitcoin." Bitcoin said Twitter said of the transactions they could track, there was $103,000 sent.
Well, it was
Now,
at
Josh,
$103,000 or 103,000 Bitcoin because that's a big difference in numbers.
$103,000 worth of Bitcoin.
Got it.
Not 103,000 Bitcoin. That would be, stupid. So that would be, bazillions of dollars. Josh, think about how big of a dope you have to be to see a text from Elon Musk, guy you like, guy I like, who owns the most, valuable car company in the world, and a Twitter, not a text, and says, "Send me $1,000 or send me $10, send me whatever you want. I'm going to double it and send it back to you." And you say, "That sounds reasonable. Why don't we give it a whirl?"
This wasn't even a charitable contribution?
No, it was, "Send me money. I will double it and send it back to you."
That's hilarious.
But because they were coming from blue check Twitter accounts, people thought this isn't. Like even before I think that maybe hackers hacked them, I'm thinking, oh my goodness, Elon. And obviously 5 or 6 hours later, that the same message is going out on several different people's Twitters. My initial thought, if I saw that, is, oh my gosh, what Elon Musk has a secretary who he's firing. And because those guys, the dirty little secret is half of the people don't actually manage their own Twitter accounts. So they've got somebody with the passwords who can log in and do all that kind of stuff. And I would think, oh, somebody's trying to, get some money on their way out the door here, and they're committing fraud. But it was actually a massive, massive hack. And that, ladies and gentlemen, is how big a dopes the American public is, and just helps me put everything else we're dealing with into perspective.
What I think is crazy is that these guys, these scammers, they missed a huge opportunity for a way bigger score, like $100,000 with the reach that these Twitter, these people have on Twitter. Isn't all that much money. It's a couple bucks here and there.
Right.
But if you think about what they could have.
Well, that was just through through what they could track through one of the avenues. So there's different, it's kind of like the monetary system has a bunch of different banks. Like Bitcoin has a bunch of different wallets and trading desks and other things like that. And the one that they could get a hold of said, yeah, $103,000 went into it just through our portal. So
So Jonah here. She said that they're thinking it might be an inside job from somebody at Twitter.
Oh, because Twitter is famously pretty,
unhackable,
top notch on security and unhackable. It's yeah.
Well, you know what's really funny though? If you were Twitter, and you wanted people to continue to maintain their trust in your platform and its unhackability, what would you say? Oh, this was an inside job. We're going to find who did it and get rid of them.
That's actually not bad, my friend. That's actually a really good commentary. But here's the thing: like, you can trust the news because, to the degree that you can trust the news, you can trust the 6 o'clock news because, like, the story comes out and it's vetted and they look at it and whatever. Like, breaking news is less trustworthy than, like, story at 6, film at 11 type news. You know what I mean? So Twitter trades on the fact that it is constant, updated. It is very fresh, real news. And the only way that can be viable for this is what Elon Musk really thinks. This is what Oprah Winfrey really thinks, is if you as the consumer, the person reading that, actually believes this is really coming from them. It's not hacked. So if Twitter is hackable, it means that celebrities don't trust it as much anymore to use it to speak to their audiences, or influencers, let's call them influencers, don't believe it as much. But also it means the consumers don't want to consume that information anymore too. So this could be bad for Twitter.
Yeah, it really could be. It really could be. All right, you ready to get into?
Speaking of bad news, I'm sure you have some more for us.
Well, sure. So I'm gonna preface the bulk and the majority of the rest of the show with a quote from from a famous guy that I really, really have a lot of respect for. Jordan Peterson is he's gotten some celebrity over the last couple years because of some of the speeches and his stance on a bunch of different issues. But mainly, the thing that I like about him is
telling people mostly to take responsibility for their actions.
Exactly.
And if your life is a mess, it's probably your fault. And it doesn't make any sense to assume it's somebody else's fault because you can't change that. But if your life is a mess and you do assume it's your fault, there's at least a chance things might get better.
Exactly. So there's two huge takeaways that I've gotten from Jordan Peterson. Number one, before you can change the world, you have to organize your own room.
Right.
The idea is get your house in order. And if you can't even organize your own room, you shouldn't be out trying to change the world. That's number one. Number two, everything matters. And that is the preface of what I want to talk about today, because there is a web of economic news that individually and separately doesn't really paint a true picture of what's happening in our world today. But when we take it all together, it is a kind of a scary look at our economy and where our country is going. And I guess what I want anybody that's watching this to take away, if we take anything away from the show, is that unless we make some changes and start taking responsibility for our country, we are going to end up in a place that nobody wants to be. Okay, so let's start with Pennsylvania news, talking about Governor Wolf.
Governor Wolf on Wednesday, Tuesday, Monday, Tuesday, Thursday. Monday or Tuesday?
Went into effect on Wednesday. So we have begun reshutting down the state economy. There were some changes based on increased infection rates of COVID across the state, across the country. Everybody's read the news. They've seen the stuff that's happened in Florida and Texas and Arizona and all these places with raising rates, California, all these raising rates of infections. And so our state is not exempt to this. Governor Wolf came out and said, all right, number one, we are going to reduce the occupancy in restaurants
to 25%.
25%, including staff.
Right.
Including staff.
I missed that.
Yeah, including staff. You must order food if you're getting a drink, because apparently if you're just drinking, you're the propensity for you to transmit COVID to those around you goes up significantly. But if you're
careful now, your bias is showing. Your bias is showing, Josh.
My shirt tail's hanging out here. So that's that. He has pushed for more teleworking, telecommutes, all that kind of stuff, working from home.
Hold on, before you get away from the bar thing. So like, you can't just get a bar. You can't just get drinks. You've got to get drinks and food.
Right.
You also, the only time you're allowed to serve alcohol is if it's at a sit down, type place. They're kind of cracking down on how many adult slushy places there have cropped up recently, and saying that the read between the lines is slushies are an open container, and you've got to watch taking those away from places. But you're also not allowed to serve over a bar. Like you're not allowed to do that. I mean, I read these rules and I thought Mormons in Utah. Now listen, I have some great friends who are Mormons. I got nothing against the Mormons. I love them. Please don't misunderstand me. But it's like that level of draconian, just so out of touchness of what's going on here. It reads to me like Mormons in Utah. And that's the thing, is like a lot of people in Pennsylvania complain about the liquor control board and complain about our state store system and everything like that. They don't realize that Utah is even one step more crazy than we are on a lot of this stuff.
All right, additional restrictions. Okay, indoor gatherings are limited to 25 people. I think there's an exemption there.
With an exemption for churches. They've finally given an exemption for churches. So Governor Wolf has admitted that the First Amendment does in fact exist.
Well, that's because the Supreme Court ruled in on this. He didn't have the right to do that. Outdoor gatherings are limited to 200 people, 250 people. However, there's a carve out there too. If it's a BLM protest, they're exempt apparently.
Wait, stop. Is that sarcasm or true?
Sarcasm.
Okay, good. I wasn't sure, because I was going to be like, "Whoa!" If they really actually codified that. Gotcha.
Right. All right. So this is what really gets me. Individuals and businesses violating these orders are subject to fines, business closure, and other applicable enforcement measures. Nothing like some concrete repercussions. I mean, come on.
Well, yeah. I mean, you're talking about the nebulousness of it, that you don't know what the actual penalty is going to be. Typically, when a law is passed, if you do X, Y will be, what can happen to you. And basically, what they're saying here is, we don't want you to do these things. These things are very difficult to enforce and not going to be enforced uniformly or standard with a lot of standards. And also, we're going to make the punishments up as we go along. That certainly is dangerous precedent to be set.
That's right. On top of that, as an example of these other applicable enforcement measures, 66 out of 67 counties around Pennsylvania are receiving CARES Act funding.
Yeah, explain to me what this is. Lebanon was, yellow. It was the last state to go, or the last county to go green, and it was, COVID state champs. There's those funny T-shirts that everybody and memes out there, and I love it and everything like that. But he's like really doubling down on Lebanon here again.
Yes.
I'm from Lancaster County, and the commissioners of Lancaster County haven't really been friendly to Wolf, and I know that there's other places that haven't been friendly to Wolf. What specifically did Lebanon do to get themselves singled out like this?
Okay, so when the state started reopening, county by county, all of the green, red, yellow, whatever, Lebanon was in the red zone, and I think at the same time it was Cumberland County was in yellow, and Dauphin, I think, was probably still in red.
Right.
But Lebanon County said, listen, we're going to open back up. I mean, the restrictions were still there. It's face mask in every business establishment, only certain types of restaurants were takeout only, all that kind of stuff. Well, the governor said, well, hey, look, you're going to have to pay for this. Well, guess what? They're paying for it. $13 million. that's not going to Lebanon County at this point. I'm sure this is going to end up in court. I mean, that you can guarantee it.
Well, the worst part is that's federal money. Like it's just supposed to be like a pass through. Like it's just supposed to go to them. Like it's just supposed to be, hey, state, we're going to give you this money that you then distribute to your counties. It's not like they're allowed to put any other checks and balances on that.
Well, and the thing is that the governor made a point when asked about this. He said, hey, listen, there's repercussions for this. What he said, the voters should think twice about reelecting the commissioners who voted for this. Oh, should think twice? I mean, it's absolutely insane.
Yeah. So here's what just kind of bothers me about this. And I don't want to say anything that is directly supportive of the man, because both my Republican and Democratic friends get mad when I do that, when I just objectively try to talk about Trump. I mean, that sounds like something Trump would say and something Trump would do. But Wolf does it at a slightly higher octave with less bass in his voice, and his voice is more breathy than how Trump says things. So he gets away for basically saying a lot of the same stuff that Trump would react in a similar reaction.
And you know what? I think it's wrong when Trump does it too. I'm
not saying it is or isn't. I'm just saying, imagine what the reaction of Trump would be if he did that. I would 100% agree with you.
Well, here's the real killer, right? It's not their money.
Right.
It's our money. It's not theirs.
Right.
And so who does this hurt? Are the commissioners all of a sudden in such a bad spot now? Oh man, come election.
No, that's the problem is Wolf is trying to hurt the commissioners, but he's actually not hurting the commissioners.
Right. It's hurting.
It's like if I wanted to hurt Josh, you know how I could hurt Josh? Punch his kids in the face right in front of him. And that would hurt Josh. Like he would be upset that his kids are hurting.
It would hurt
you hurting the kids.
It would hurt you more.
Well, but you understand. But you understand the analogy, right? Like when you hurt somebody to hurt somebody else, you're the problem. You're the guy with the problem there.
Well, and the thing is, it's not as if I love these commissioners.
Right.
Like you're hurting your constituents. They share constituents.
Right.
That's the biggest issue here. You're hurting local governments. Like really? You're taking money out of local governments when they're trying to find enough money to pay to keep the schools open. And by the way, all of these movements are setting the groundwork to close the schools again in the fall, which is outrageous. So that's my soapbox for Governor Wolf. The next issue to talk about is probably the largest issue that is going to have the largest impact on the housing industry in the next 6 months. And it's going to be a huge, huge impact. And that's evictions. So this week, Arizona? Hold on here. Arizona. Yeah, it's Arizona and Michigan set to resume eviction filings or eviction action for filings for, to get unpaying tenants out of properties. Both of them kicked the can down the road. You've seen the same thing in Boston.
Well, we did the same thing. We did the same thing in Pennsylvania. It was supposed to be July 10th, and then the governor passed just an executive order saying that it's not going to be until August 31st now.
So here's the big issue. Here's the big flaming flag, right? According to Fox News, 12 million households missed their last rent payment. 12 million. Okay. Right. And 23 million households, they've got little or no confidence that they can make their next rent payment. Take that into consideration when we're looking at the same time, we have the expiration of the additional $600 unemployment.
Right.
And all of this stuff. Do you think it's going to get better, or do you think it's going to get worse in the next month, 6 months? It's probably going to get worse.
Yeah.
So my question initially was, why are these state governments and why are they kicking the can down the road? Because it's not going to get better. The mountain's going to get larger, and now you're going to have courts that are overrun by all of these actions. It's going to shut everything down. So what's the point? And in my opinion, actually, it's not my opinion. You can see it already happening. They're delaying the application of these reinstituting eviction filings so they can pass laws that change the ability to do that. And you've already seen this.
Do you think something similar to like rent control, what we see famously in New York, but other large metropolitan areas that have rent control in them, you think that we're going to have something that it makes it difficult, much more difficult to file for eviction on people?
It's already happening. In Oakland, the city council just passed an ordinance, and I'm going to make sure I see this and say this correctly. And so in Oakland, they passed a law. They limiting evictions of tenants with disabilities and with health challenges. So you can't even file if you've got someone in those situations. In addition, it limits rent increases to 5% a year. So even though you're going to have a huge demand for this housing, and the market rate might be $2,000, if you charged $1,500 last year, sorry, too bad.
Right.
You're out.
Right.
Philadelphia, Harrisburg, and Pittsburgh all have proposals that are very similar in nature, and like you could see this being implemented across the country in large metropolitan areas.
Right. So here's the problem with the liberals and their ideas like this. Let's take Harrisburg.
Yeah.
If Harrisburg passes a law like this, do you know what that does? It just creates more development on the West Shore. You know what I mean? All these people who want us to live in cities, these people who want to fight urban sprawl and other things like that, they pass laws that create urban sprawl. Because Josh, if you're an investor, where do you want to invest? Do you want to invest someplace where you can't evict people, or where you have where you can, if the person runs afoul of the lease, you can't evict them?
Well, so Judah, it's like you took the words out of my mouth. Who do you think gets hurt the worst here? Because people that are in higher income brackets that are renting, even median home areas that with people that are renting, these aren't the areas that are most affected by the downturn and that need good housing. It's lower income areas. And so when you take the financial incentive away from landlords to make money in those lower income areas, you're going to be left with slumlords who are not going to follow the laws anyway. And so the only option for low income housing is either going to be government homes or it's going to be slums.
Right.
I mean,
think about it. If I was going to rent to two different people, and I had Josh on one hand and I had Sam on the other hand, and Sam is pretty good, but there's maybe some shakiness about Sam. Josh is aces. Well, guess who I'm going to rent to every single time? You know what I mean? I'm going to, and guess who, if I can buy housing, guess who I'm going to buy housing that will attract is typically right now, there's a case to be made. And I tell this to people all the time. There's good and bad about buying A quality properties. There's good and bad about buying D quality properties and everything in between. A quality properties are great because there's less margin in them, but there's also less headache in them. There's good and bad about buying D quality properties. There's more headache, but there's also a whole lot more margin. Well, guess what? That margin disappears if once somebody goes afoul of the lease, it takes me 3 to 6 months to actually evict them and get them out.
Right. Exactly. So, I mean, one of the benefits of investing in C and D class neighborhoods is the increased cash flow. You know, the paper return is much higher, even if you consider, hey, look, yes, I know that 1 out of 20 tenants I'm going to have in eviction at any given time, or maybe it's 3 in 20 or 5 in 20, whatever the number is. You've got some kind of standard. Well, if now you can't even evict them you can't even start the eviction process, let's say for 90 days or 6 months, and you take the financial incentive for the increased cash flow out of the picture, why would you ever invest in those areas? Right. Just down the street, just go over the city line to a median home price neighborhood.
And here's the scary thing. So Bart asked a good question here. Who will be enforcing the new 5% max? So let's say that Josh is a tenant of mine and I rent to him a property for $1,000 a month in 2020. If I try to have Josh sign a lease for more than $1,050, that's a 5% increase. If I try to have him sign a lease for more than that, that would run afoul of this, and he could take that to the authorities and he gets me in trouble. Now,
That's right.
I got to tell you, it's few and far between where you can, on a regular basis, get a 5% rental increase. That's not the point. That's not the point. The point is it's 5% right now. What happens 10 years from now when new people run and saying, we're going to cut that back from 5% to 3%, or we're going to cut it back from 5% a year that they can only raise the rent on lease on move out as long as you stay there and decide to renew the lease. It's just when government interferes with market forces, it causes all kinds of unintended consequences.
Yeah.
And here's what's important, Josh. Here's what we need to remember. I was, between musical Hamilton and the 4th of July and everything else, I've been having all kinds of conversations with my kids about government and things like this. It's very important because everyone says, oh, well, we protested and dumped tea in the harbor for less than this. That's not actually true.
Yeah.
We were protesting no taxation without representation. We were protesting the lack of representation. Here's the thing, ladies and gentlemen. Before you complain about government, complain about yourself. Before you blame government, blame yourself. We get the government we ask for. We get the government we deserve.
Yeah.
I think that this is very much in our power to change. If we want to change it, there's an election coming up in November, and it's very easy to figure out which candidates like this craziness, which candidates don't like this craziness. And if you like this craziness, if you think all that's going on right now is great, then you should vote accordingly. If you think that this is a little bit overblown, then you should vote accordingly. So that's why I have hope, Josh. I know that you're very doom and gloom, more pessimistic than I am. Let's put it that way.
I am. Here's why I'm concerned. We're due for a downturn in housing, right?
Correct. We were due for a downturn in housing before COVID happened, and you and I were talking about that.
That's right. That's right. My issue is not that there's going to be a downturn. It's that there will never be an uptick again. Because in a lot of these urban markets, like I'm somewhat of an expert about this. And I'm serious. Like I had an investment company. I was a partner in an investment company in Philadelphia where we would identify emerging markets and invest in shell properties, completely renovate them, and put tenants inside, knowing that today we have more invested in the property than it's worth.
Right.
Because we could see the demographics of the area changing and the progress of the city, knew for, pretty darn good, high percentage of return that in 5 years, that property was going to be worth 3 times the amount.
Right.
Well, when you limit the ability to increase rents, when you limit the incentive for development in these areas, what you're going to get is no investment in those areas.
Right.
Well, eternally depress the market. And the only alternative that you have is to have government step in and take care of people, because we're not going to let people sleep on the streets. We're not going to have 23 million households, homeless because of this COVID shutdown. That's not going to happen. The government will step in and change the regulation. And then all of us landlords, all of us investors, it takes a whole section of the investment world and it just disappears.
Right.
And that's what I'm against. That's what I'm pessimistic against. Anytime that there's a governmental action, there is an equal and opposite reaction from the private market. You know what's happening right now? What's happening is individual landlords who are probably unscrupulous, they're finding loopholes in the system. In New York City, I read multiple articles over the last 2 weeks about landlords moving back into their rentals and kicking the tenants out because there's a loophole. If you want to move back into your property and occupy it as a personal residence, you can evict because of that.
Right.
So that's what landlords are doing. There are multiple.
They're moving into a place for a week and a half, and then moving into another one of their places for a week and a half. Right.
Exactly. Yep. They're moving back into their primary residence, showing up with moving trucks, moving.
And here's the thing: I don't condone that behavior. You don't condone that behavior. However, it's what happens when you try to when you make a law that can't be reasonably enforced and upheld, and it's what happens. Let's talk about unemployment, my friend. I think we got this sense there on what's going on with evictions and government wolf. We're certainly not in a great shape with unemployment, because the $600 supplement on top of unemployment is looking to expire this month. 1.3 million new jobless claims. That's not continuing or existing. That's 1.3 million new people filed. That's a 17
no big
week,
deal.
Stretch now that we've been over a million. The number is slowly coming down. Continuing claims, stand at 17.3 million. So we've got 1 million filing new, 17 million completed, and we're also looking at that there's a very good chance that there will be 14 million more people out of work. But still in the labor force, looking for job openings and things like that.
Well, yeah. So that 14 million is actually the number of people that are either unemployed or out of work
that wish they would be.
The number of job openings, right? So, like, let's say there's 50 million job openings.
Right.
There's 64 million people looking for.
Yeah.
There's not really 64 million people looking for jobs.
Yeah, I see what you're saying.
That's the imbalance. There's 14 million. And with all of the conversation about shutting back down the economy, how many of those businesses are going to be able to survive another shutdown?
I know several businesses that have mentioned they got through it by the skin of their teeth, and they would have a hard time being shut down again.
Yeah. So there's a lot of that stuff going on. Housing and retail looks really, really good.
Yeah.
Let's see here. If you take,
Josh, do you have the graph? I mean, everyone's saying that we're not going to see a V-shaped recovery, and then we go ahead and actually get a V-shaped graph, my friend. If you plot out, take out gas prices, and I used to be one of these guys that's like, oh, take out gas prices. If only I could do that in my budget. Like now that I look at things from an economic perspective, because gas is fluctuative, when you're doing like short term, month over month, or quarter over quarter, taking out gas prices is helpful. But then when you look at things on a yearly basis or 2 or 3 years, you should have prices of gas and oil in there. When you look at it, it is very much a V. Retail spending is right back to where it was pre-COVID.
Right. It's actually higher. It's 2.7% higher than it was. So that's really good. Manufacturing
in line with trends. We got to post that. We got to post that graphic on our page later on in the day.
Okay. Yeah, we'll put that up there. But all right. So manufacturing is showing signs of recovery. That's really good. That means more jobs, more products, more, very good for the economy. And then there's housing. Newly built homes are 55% higher annually in June than they were.
Sales of new built houses. That's what's great about that is that's not permits and that's not starts. So the trend is permits, starts, that's when they actually break ground. Sales. So the sale number is up by 55% on new construction.
Yeah, that's a big deal. That's a really big deal. It's the largest since 2005. Largest increase since 2005.
Yep.
Existing homes. Okay, so existing home sales. I didn't have any numbers for this, but the last 2 weeks I've been completely shocked. We've had a ton of closings on properties that I've underwritten, and I'm pulling comps for these things. And one of the things we look at is like, what do the active listings look like? That's a really important part of the conversation. There's nothing out there, and I'm seeing pending sales and settled properties with less than 10 days on market, almost consistently across the board. And the ugly houses, the as is sales, they're selling in like 20 days.
Right.
You know, I mean, so if you've got a nice looking property and you've been thinking about selling, now is the best time to do it. Give Judah a call because like I'm predicting a downturn in the housing market.
Harvest your equity today.
Right.
You know, get into another property, move up. If you're thinking about, you know what, I want that, bigger house now. Well, a ripple's coming. Now, listen, here's the other thing. Housing is way above right now what it was in 2010 and 2011.
Yeah.
And a lot of people wanted to move in 2010 and 2011, didn't. And then they were like, well, geez, now I can't sell my house. And now I also, I can't because the economy's weak. I can't buy the house that I want to. And people have been stuck in a house that they don't want for almost 10 years. Whereas if they would have bought a house that they knew they wanted to be in for the next 10 to 15 years, if you're going to make that move up or downsize, retire and move down, and you want to be there, don't be stuck in your current house for 10 years. Make the move now.
How about this? You already always talking about house hacking.
Yep.
So that's something I didn't do when I first got married that in retrospect, I wish I would have done. Well, if you miss that window, you can sell at the height. And when all these evictions start happening, you are going to be like the one-eyed man is king, right? You're going to have cash. You got good credit, rent for a year.
Right.
And a year from now, when the market is down, I'm not even going to make any predictions, but let's say it's down 5%. On a $500,000 house, you just saved $25,000.
Right.
I mean, and that's real money.
Also, here's the other. We talked about renting. Rule, laws, and changes. There is it's not the Mrs. Bixby rule. That's the letter Lincoln wrote. It's something else. There's a rule that, like, not nefariously discriminatory, but you can be more picky. Let's use that word because unfortunately discriminatory has gotten a bad rap as a word. So if I live in one of the units of my house and it's a primary residence, I have a whole lot more leeway when it comes to screening tenants than what Josh does if he owns a 4-unit and is going to rent it out. Because I live there, and therefore I, as the property owner, have more say in who I want to live with and who I want to live around. Yep. So there are specific protections on the books if you live in the property and allow a lot more leeway. Don't take advantage of that. Don't use it to be a racist jerk or any of the other ways that you can use discrimination to be a problem. But you've got more wiggle room, let's say.
Yeah. So anyway, the housing numbers are insane.
Yeah.
In the U.S., homes selling within 2 weeks of being listed on the market are 34% higher in June than they were in 2019. I'm sorry, as of June, 2020 compared to
2019. Yes.
Right. So within 2 weeks, 34% higher. That's insane. Like, that is really great. In Texas, 50% of homes that went under contract are being sold for more than list price with multiple offers. Like, that's a big one.
And here's one of the reasons. Here's one of the reasons why everyone's fleeing the cities.
Yeah,
you know what I mean. So New York, we're looking at a volume that is down 25%, and median home price is down 13%.
Yeah.
So nobody's buying into New York. Everyone's trying to sell out of New York and other markets like it. And the other thing that's keeping this very much buoyed is we've seen interest rates touch on under 3%. And we've seen loan officers quoting and locking and talking like that. For the first time, the average loan that closed was under 3%. 2.98% is the average 30-year fixed mortgage that was written in America last week. That's crazy.
Cray. It's nuts. It's really nuts. So there's a lot more going on in the world. The one takeaway that I want you to get out of today's show, really more than anything else, is look, the future of this country is in your hands.
Right.
The future is in our hands. Everything you do, it matters. So if you're debating whether to pay your rent this month, or you're debating whether to sock some more money away and, get that abatement on your mortgage, or you're debating whether you should be looking at an investment property or sell your house or whatever, give it a good look. Give it a good look, give it a second thought, and consider how it's going to affect those around you. And frankly, if you're considering whether wearing a mask to the store or not, consider how that's going to affect the people around you, right, regardless of what you think of what it does and what it protects and all that kind of stuff. Whether we want to admit it or not, we have an obligation to the rest of the people in the community that we live in. Correct. And yeah, that's it. That's all I got. We're going to be back here on Monday. We're going to be talking about how to get the most amount of money. Next week, we're going to talk about how to list your house for the most amount of money. How, what are the steps of listing your property? What steps should you take to find the best agent to sell your house? And then we'll talk about what's a checklist about how to get the most amount of money for your home. We got some really great agents, a really great agent guest that is going to be on with us next Thursday, right?
Yep.
And so we'll be back noon on Monday. Everybody have a fantastic weekend. Anything for the good of the cause, Judah?
Nope, that's it, man. Let's rock and roll and make some great stuff happen.
I love it. See you, everybody.
See you.